Hi guys, welcome to my YouTube channel, and let me take this opportunity to thank you all for your support for my last video strategy which helped me to quit my job and start full-time trading. That was the 100k subscribers special video, and you have given me more than 100k views, that is more than 1 lakh views within 5 days. I am really thankful for all of you for showing support to my YouTube channel. So I decided I'll come with one more bonus video, and the bonus video is part 2 of strategy which helped me to quit my job and start full-time trading. In the previous video I discussed basics. I discussed about the basics things about the supply demands, where you have to enter. I said there are 3 things happens when price comes to supply zone, either retracement or a breakout or a fake out, and I said where you have to enter everything. In this video I am going to make it more advanced. I am going to discuss more minute details. I am going to discuss in more elaborated way which I normally discuss with my webinar students in my webinar. But in this video I am going to discuss those minute details also about what actually happens when price comes to retracement. Why they say breakout, what actually breakout means, what actually fake outs, why I say when breakout fails you have to go short, actually what happens, what is the logic. So that will be discussed in this video. Remember, I keep saying that price action means there is some logic, because market doesn't go up and down because of indicator, because it's all because of buyers and sellers. Price action means nothing but action between buyers and sellers, right? So same thing, when you see the chart you should be able to say what actually happening there. Where is the buyer's stop loss? Same time you should know where is the seller's stop loss. Being a retailer, sit in the sideline, okay? Just sit in the sideline. When price comes to the important location, just try to read the chart and decide who is stronger, who is winning the match. If buyers are winning the match, go with the buyers. If sellers are winning the match, go with the sellers. So whom you seeing stronger, go with them. That is how people make money in trading. Don't go opposite way. Mean, if there are buyers are strong, then don't sell it. When you see short sellers are strong, then you should sell. I'll explain in such a way that you should feel interesting and you should feel that you are watching a feature film. Okay, so I'll tell you about the story about the buyers and sellers on the chart. Before watching this video, I request you to watch this video first, then come and watch this second part. If you have not watched this video, then I have given the link below this video in the description section. Click that video link and watch that video, and then you can come and watch this video. So let's move to the charts now. Okay, last time I said supply means if price goes up and suddenly crash, that is the supply zone. Demand zone means price suddenly bounces from a level, right? This is what supply and demand I said. Supply means the extreme end where price crash. Demand means extreme end where price bounce. Suppose Nifty is trading at 10,500 here, okay? You know that some people are always bullish, some people are bearish, some people are buyers, some people are sellers. Some people think Nifty will go up, so they start buying. Some people will think Nifty will go down, they start short selling, right? That is what happens in the market. It's all about the fighting between buyers and sellers. If you are a buyer, you want market to go up, right? Because then only you can make profit. If you are a short seller, you want market to go down, then only you make profit, otherwise you make loss. So that's what both are fighting out. Buyers want to take it up, sellers want to take it down. Market always looks for the liquidity hunt. You should know that market always goes up and down looking for the liquidity. Liquidity means what? Liquidity means where there is a big order. Big order, either it can be a buy order or there can be a sell order. Why market is looking for liquidity? Because liquidity means once that level is reached, you can expect a action. Because when price comes near that liquidity zone, either here or here, 2 things can happen. Either there can be a big explosive move, or there can be a reversal. Either there can be a big explosive move on the down, or there can be a reversal from that level. Okay, so being a retail trader, what you should do when market is going up and down, don't do anything in this region. Don't do anything in this 2 region. Let price comes either here or here. See whether buyers are strong or sellers are strong, then you can take the decision. I said there are 3 things, right? One is retracement. Retracement means it's like a reversal. Second thing I said, breakouts, right? Third thing I said, there will be a fake out. Breakouts and fake outs are opposite. Now let us see what actually means retracement, what actually breakout, what actually fake out, what is the logic behind that movement. So that I am going to show you on the chart, and I'll explain you like a story between buyers and sellers. Okay, so let's move to the charts. Okay, if you remember which day I posted my first part of YouTube video about this strategy, on 15th of July, right? You can go and check the video on which date I have posted that video, first part. It was on 15th of July, and 15th July there was a supply zone. Can you see here? Same day which I posted on YouTube video, there was a supply zone. Now look at this chart. If you apply a logic, what it tells you that this is the level where sellers aggressively started selling. They wanted to mark it down, and they were finally successful. They were successful in taking market down. That means there are aggressive sellers here. Okay, aggressive sellers, short sellers, people who have big pocket. That means big players, right? They have money power where they can take market down, and this is the level they short. Tell me one thing, when you are a short seller, what you do? You'll keep your stop loss, right? Where you normally keep your stop loss? Suppose if you are shorting here in this region, where you are likely to keep stop loss? You are likely to keep stop loss somewhere here or somewhere here, right? If you are shorting here, then that is what you keep your stop loss. Stop loss is nothing but what? Buy order. Why? Because when you are a short seller, you should keep opposite order, that is the buy order, right? That is what stop loss is. So there is a huge buy order here. Okay, huge buy order. That is what I said, liquidity. That is where liquidity is there. Where is the liquidity? Liquidity is above this level. You should wait for price to come to that level to take the trade. Now let us see what happened on next day. So let us start with the replay button to see 16th what. Price did not reach that supply zone. What I told you in the first video, I said price doesn't reach that supply or demand zone, then you should not take the trade. So 16, if you are a supply and demand trader, then you would not have taken any trade because price did not reach that level, right? So you will not take any trade. Now let us see on 17th what happened. Okay, now finally you can see that price reached that supply zone, the blue color line which I plotted, right? And made a bearish candle. Bearish candle means, I said it's a retracement, right? That means reversal likely to happen. You know that you have to short this candle, but what is the logic? Why it is reversing? Because what I said, people who shorted at the supply zone, they are short sellers. They have the stop losses. They have the stop losses around this region. What is the stop loss? Buy order. Short sellers who have the stop losses, now they know that their stop loss going to hit if they allow this buyers to go up. So what they will do? They will put all their energy, all the efforts, push the price down so that their stop loss not triggered. So that is what happens in retracement. Retracement means the sellers who are at this supply zone, they are successful in pushing the price down. What I said, you have to short here, right? You will take a short position because now you are expecting market to go down, right? You have taken a short position. Now where you will keep the stop loss? Stop loss you will keep where the short seller kept. Short seller must have kept stop loss here. So you can also short here and you can keep your stop loss here. Now where to book your profit? Where to book your profit you should know, right? Because trading is not only about the entry. Trading is not only about the right entry. Trading is also about the exit. That means you should know where to exit, where to take your profit. If you don't take profit at the right place, your profitable trade can turn into losing trade. So now if you ask me where to take the profit, this is the place to take your profit. Why so? This is the place. Look at this. Look at this candles wicks. From here, you can see big movement happened, right? That circle says that is where buyers are active. That is why every time price came, that circle made a bounce. Every time price came to that circle, made a bounce. There are buyers in that level. So your take profit should be here. If you are shorted here, take profit should be once price comes to this level. So now let us see what happens after this. Can you see where exactly price reversed again? Because last time price bounced from here, this time also likely to take the support. So take profit here. That is what I said. I'll show you exit, way to take profit, way to keep stop loss. What is the opportunity here? Breakout, right? Finally candle broken that blue lines, that mean breakout from the supply zone. When breakout happened, what I said, you should go long. Why? What is the logic here? Now I'll tell you the logic. Breakout happens mean people have stop losses here. What is the stop losses? I said stop loss is their buy order, right? All buy orders getting triggered here. And what you can expect? I said market looks for a liquidity. If there is a liquidity and market touches that level, expect a explosive move on the upside, right? That is what breakout mean. All stop loss got triggered. So all people who had stop losses above that line, above that wicks, above this wicks, let us see what happened after that. I told you that chances of explosive move becomes higher. It didn't happen. What happened? Price started coming down. If you are a breakout trader, what happens? You will get panic, thinks that, oh, this trade is failing, I'll book my loss. Or I said about the fake out, right? Fake out means what I said, breakout fails. Has breakout failed here? It didn't fail. It's not a fake out. When you have to know the fake out means only once the breakout candle low gets broken. If this low gets broken, then you should say it's a fake out. What is the reason? That I'll show you on another chart, next chart. But just remember, you should not take it as a fake out just because it's a red candle. It closed below that blue line. Until this candle, breakout candle low is broken, it's not a fake out. Okay, so what you should do? Stay in your breakout trade. Keep your stop loss here. Don't worry, just stay and see what happens. Okay, so now let us start with the candlestick again. And can you see that? It was not a fake breakout, it was a small retracement, right? You thought it will reverse, it didn't reverse. Where was your stop loss? Below this breakout candle. Price only came till here and started going. So it's a breakout trade. So that's it about the retracement and breakout, what actually logic happens. Now I have to tell you about the fake out. What is the logic behind the fake out? In the fake out, what actually happens? Why I said you should not consider as a fake out until this candle low is broken. Now let me show you on the another chart. Okay, this is July 2nd and you can see where is the supply zone. This is the supply zone. Now let us see what happened after that. Okay, this is a breakout, right? Why this is a breakout? Because candle successfully closed that blue line. So what you will do, you will go a long trade, right? You will go a long trade, and where I said you will keep stop loss here. Now what is your stop loss now? I said when you are short selling, your stop loss is a buy order. You are going long here, right? You are a breakout trader, you have taken a long order. Your stop loss is nothing but sell order, right? Stop loss is nothing but your sell order. So there is a big sell order here below this candle. There is a sell order. There is where liquidity. There is a sell order below this breakout candle. I'll mark another line. I marked here. That is where people have stop loss. There is where sell order. Okay. Remember this line. Let us see what happened after that.
breakout, failed. And what is this? Fake out. Fake out means breakout doesn't work and it reverses. In earlier chart, if you remember, I said it was not a fake out until price broken the breakout candle low, right? So this was not a candle to short. It was not a fake out. Which is the fake out? Fake out is this candle, right? The candle which broken the breakout candle low, you should enter. This is the entry. That means people who went long here, that trapped, their stop loss getting hit. So you have shorted this candle, the red candle, where you'll take profit. I said take profit at the level where market made a big bounce, right? You book your profit and your exit, right? Because last time also you knew that this is the level where price moves, right? And you can see the how price action works so beautifully on your chart. But only thing is that you need to know how to read the price. You need to know how to mark important levels. Now few people ask me when they're in the full-time job, how to do this, because in the full-time job you can't keep watching the charts, right? For that, what is the option for them? There is an option. In trading, you can go here. Can you see here one alert button here? Can you see this alert? Go and click that alert button. If you are into full-time job, just plot those levels, horizontal lines on supply and demand zone and create a alert. That is what you can do. Okay guys, that is what you have seen everything, retracement, breakout, fake out in much detail in this chart.
Okay guys, that's it. You have seen actually what happens near the supply and demand. What is the logic behind the supply and demands, right? I've explained it in much clearer way. Next time when price comes to supply and demand, you will analyze the chart just like a story between buyers and sellers. You just wait in the sideline. If buyers win the battle, go with buyers. If sellers win the battle, go with sellers. And remember, price action doesn't mean that it's only about the supply and demand. There are so many things, okay? In my webinar, I discuss about the price action based on previous day high, previous day low. Price action based on gap border. Price action based on CPR. Also price action based on first candle of the day, okay? Whether it's a bullish or bearish. So there are so many things which I discuss in my webinar. So if you are interested to learn all these things, then you can join my webinar. I given the link below this video in the description section about my upcoming webinar. So if you are interested, you can enroll for my webinar and you can learn more about the day trading strategy. Okay, thanks guys. Thanks for watching my videos and I'll see you again with a new video. Thanks and take care.